However, despite the introduction of these thresholds and rebates, compliance gap were still very material. Taxation as a civic duty. In summary of this slide is that tax is a civic duty and firmly enunciated by our Constitution under Section 24F of the Constitution. And apart from that, even our religious books encourage us, to be tax compliant. We go to the NTA advances ideal through digitalization, transparency, and taxpayer partnership, turning compliance into patriotic act of nation building. Understanding components of tax compliance. Tax compliance encompasses registration, filing, payment, and reporting of tax obligations in accordance with the law. We have two major categories. We have voluntary tax compliance and we have enforced tax compliance. When taxpayers willingly, accurately, and promptly declare income, file returns, and pay taxes without enforcement on or before the due date of their filing requirements, we call it voluntary compliance. But when tax authority compels through lawful measures like audit, penalties, or recovery actions, we call it enforced compliance. The target of this workshop today is not the enforced compliance, but underscore the need for voluntary tax compliance. The NTA 2025 balances these models by prioritizing fairness, education, and service, ensuring that engagement precedes enforcement and clarity replaces compulsion. Behavioral models of tax compliance. Tax compliance is influenced by various models and theories in fiscal jurisprudence, but we can identify major 4 types here. The willing compliance that obeys the law out of patriotism, ethics, and conviction. They are all here. Persuadable compliance complies when guided, educated, or encouraged. The negligent, non-compliant fails to due to ignorance, poor records, or inattention. The deliberate evader. The essence of this task clinic is to explore and see, even those that are compliant, the way it can be done. And for those who are not knowledgeable enough for how to comply, to encourage them to comply. And for the deliberate evaders, for them to think twice, because effective engagement demands differentiated strategies that encourage the persuadable, correct the negligent, and deter the evader. Voluntary compliance, a driver of inclusive growth. Voluntary tax compliance occurs when taxpayers willingly and truthfully declare their income, file returns, pay taxes due, correctly on due time. On time means every taxpayer has this due date, and when you pay on or before your due date, you fall under the voluntary compliance. It is the hallmark of civil responsibility and the engine of sustainable national development. When voluntary compliance thrives, the tax gap narrows significantly, revenue mobilization increases across all levels of government, reliance on borrowing to fund public expenditure will reduce or even eliminated, citizens enjoy better standard of living and shared growth. The cost of enforcement declines, freeing resources for service delivery. Taxpayers benefit from incentive, reliefs, and credit embedded in the Reform Act. If you are not compliant, you cannot access all the numerous benefits that are in this new reform. Risk and penalties are reduced through proactive compliance. The tax to GDP ratio will improve, promoting sustainable economic growth. Above all, trust deepens, strengthening accountability in governance. Nigeria's new tax framework, building compliance through reform. The 2025 tax reform represents a comprehensive restructuring of Nigerian fiscal architecture, anchored on four tax laws. Those four tax laws are known to us. Embedded in those four tax laws is compliance. Once compliance is ensured, the four tax laws are reduced, to barely development incentives, standard of living and the economic development of the country. If you look at the NTA 2025 provisions 1 to 31, it unified the tax administration numbers for all taxpayers, digital self-assessment and filing system, mandatory disclosure of tax planning arrangement by taxpayers, record keeping obligations, and administrative fairness. The reform positions compliance as a service built on technology, transparency, and trust. Strengthening voluntary tax compliance through taxpayers' trust. There's a lot of mistrust, among the taxpayers and government. But however, this FRS tax clinic for tax clarity embodies these values by fostering education-led compliance. It provides clarity on new tax laws and processes, offers support to taxpayers seeking guidance, creates a safe platform for dialogue and feedback, and demonstrates government commitment to transparency and service-driven administration. This initiative transforms compliance environment, empowering taxpayers while reinforcing institutional credibility. Upholding taxpayers' rights and access to redress. The NTA 2025 guarantees taxpayers' rights to fairness, assistance and confidentiality, and redress. Taxpayers' rights includes, among many others, right to information and education, which we are currently doing, right to professional service and confidentiality, right to object, appeal, and seek redress, right to refund on fair treatment. Available redress mechanisms include internal review and resolution within the relevant tax authorities, including administrative tribunals for independent adjudication, tax ombudsman that will offer free services to the taxpayers at government cost, judicial recourse, ensuring due process and constitutional protection. These mechanisms ensure justice, transparency, key pillars for restoring public trust in taxation. Accountability, sanctions and enforcement. Section 100 and 137 of the NTA 2025 established a balanced regime of administrative and criminal penalties. Administrative penalties includes late filing, failure to register, incorrect returns, obstruction of tax officers, failure to obtain tax ID, among others. Civil sanctions, fines, interest on unpaid taxes, false declaration, improper record maintenance. Criminal offences, fraudulent evasion, falsification of records, aiding or abetting non-compliance, what in the EFCC balance we call it predicate crimes and offences. Corporate and petroleum offences, breach of institutional remittance obligations, and fiscal misconduct by operators. This structure enforces accountability while upholding fairness, ensuring that penalties deter non-compliance, but to do not discourage honest participation. Professional stewardship, sustaining compliance through ethical practice. The NTA 2025 Section 33 mandates that only accredited tax agents may prepare or file returns on behalf of taxpayers. Individuals can file on themselves and declare that the returns are correct, or they can file via their agents, where the agents demonstrate that enough technical competence and ethics have been applied in that returns. The CITM, through its professional rules and practice guidelines, PRG 2023, and Statement of Standard Accounting, Statement of Taxation Standard 1 to 9 upholds professionalism, competence, and ethical practice. These standards ensure that tax agents serve as ambassadors of trust, facilitating compliance and not complicating it. Recommendations: to deepen taxpayer education through multi-channel outreach like the FRS Tax Clinic of today, expand interagency collaboration and data sharing, enhance transparency through local tax utilization scorecard where various administrations will demonstrate what taxpayers' payments are used for, leveraging digital identity systems like NIM, BPM, and utility bills, deploy analytics for targeted risk management and evidence-based administration. Conclusion: voluntary compliance is more than a fiscal obligation. It is a national ethos. It represents the meeting point. It represents the meeting point between government accountability and citizens' patriotism. When compliance becomes culture, governance gains legitimacy and prosperity becomes inclusive. Whenever compliance becomes culture, governance becomes stronger and prosperity becomes shared. Thank you very much, distinguished ladies and gentlemen. I have the floor now.
Another round of applause to the President of Federal Institute of Taxation of Nigeria. Thank you very much, sir. So I know, so a couple of people have asked me, given me some questions, have asked questions to me. A couple of people have also indicated interest to ask questions, related to this presentation or outside this presentation. Please just write down your questions, keep them. There will be time for questions and answers as the event goes on. We have another presentation now, which is going to be made by one of our deputy directors at the Federal Inland Revenue Service. But before we go on with that, we would like to ask that some of our staff from the Federal Inland Revenue Service who are here should please just go to the foyer for a short meeting without necessarily disrupting the session. Our staff, apart from the heads of offices, but our staff that have accompanied the heads of offices, please just go outside for a short meeting with the director, FCT, Emerging Taxpayers Department. Moving on, we have our next presentation coming up now, which is titled Understanding Nigeria's New Tax Laws, Key Highlights, Implications, and Opportunities for Emerging Taxpayers, for our stakeholders like you. This presentation will be made by the Deputy Director, who is also the Head of Division of International Tax Department, who was also a member of the Presidential Tax Reform Committee. His name is Mr. Kehinde Kadeshomo.
Good morning, everyone. It is my pleasure to be here. Quick disclaimer. I wasn't a member of the Presidential Committee. I only worked closely with them. Thank you. Yes, better than the all protocol duly observed, but while observing all protocols, I quickly want to appreciate one person in our midst. If you see any good tax officer today, that person must have gone through the tutelage of that person. And no other person than Hajia Sekusimi. Please let me celebrate her. Let's celebrate her. Let's celebrate her. a good task official herself and do so many of us. We really appreciate what we have done in the service or what we did in the service. To my directors, my bosses, it is my pleasure to be here. Thank you so much, sir. And the organizers, thank you for inviting me. I will be looking at this topic, understanding the new tax laws, and I've been told I have very limited time. So if I'm talking too much, please, the organizers, call my attention. In fact, when I have 20 minutes left, remind me that I have just 20 minutes left. Okay. So we all know that our tax framework has undergone major surgical operation. We are coming from a time when we have so many laws that have been archaic. I remember when we were doing this work, when we were carrying out this assignment. Stamp duties, I mean, capital gains tax specifically. Sometimes one section in capital gain tax can take us 5 hours to interpret because we have to first interpret before we are able to simplify and translate a new rule. So sometimes one provision can take us hours to interpret. So if for tax officials we have that challenge in interpreting provisions, we can imagine what our taxpayers were facing. So that is the concept that brought about this work. Having a tax rule that is simple, having a tax rule that every taxpayer can relate to, having a tax rule that everyone can easily compute and pay their taxes. Our boss, Mr. Ohagwa, spoke about voluntary compliance. How can you comply voluntarily when the rule is even difficult to interpret? So what we have done is to have a rule that will even promote voluntary compliance. And I also want us to clap for Nigeria. Please clap for Nigeria. And clap for the good hands we have in Nigeria. I joined the policy in 2012. And when I joined the policy in 2012, I met some white men, Professor Miller and co, Peter Harris and co. They were trying to help Nigeria under the auspices of the World Bank to simplify its tax rule. My people, that thing was not completed for years. But the Nigerian hands, experts, we handle that work and within 2 years we deliver on this. Let's clap for Nigeria. So sometimes when we go abroad looking for good hands, look for experts, I can tell you that we have more than enough experts in Nigeria to carry on any assignment. Now, if you take a deep dive into the law, the tax law reform involved comprehensive review and redrafting of all our tax laws, and not just the tax law, and all the related legislation. My people, it's a transforming journey, a transformative one at that, as simplifying tax compliance, of course, enhancing voluntary compliance, enhancing clarity, coherence, and effectiveness of our tax laws. When, I said I was a member of the presidential committee, but I was privileged to be there. So when they were carrying on their work, there were some basic principles they followed. And the first one is simplicity. They said we want to have a tax law that is simple in rule, simple in interpretation, simple in text. And at the end of the day, we have a rule today. In fact, we were discussing yesterday, and I said, even if we don't have information circular, the tax law we have now, people can pick it and implement. So yes, information circulars will come, but we have a rule now that doesn't even need information circular before we can implement. Then another thing, guiding principle was harmonization of the tax laws. We presently have more than 30 tax-related laws. And now, after this reform, we have just 4 tax laws. Then we have one of the guiding principles is to ensure neutrality of tax. And when we are talking of neutrality of tax, we are talking of export neutrality, we are talking of import neutrality, and we are talking of neutrality between the taxpayers in Nigeria. So, and that explains the reform that has happened in the free trade zone, so that we have a law that allows neutrality between those that are in free trade zone and those that are not. And those that are in the incentive regime, which is the priority sector, and those that are not. Then we have tax certainty. Taxpayers should be able to know what is to pay, how to pay it, and all those. Then the reform is taxpayer focus. And the good thing, the taxpayers are here today. I can assure you, when these rules were drafted, they were focusing on taxpayer. In fact, CITL was there in the drafting, ICANN was there, representative of manufacturers were there, and so many people were there when these rules were drafted. And they ensured that we have a rule that will enable taxpayers to comply easily. Modernization of our tax law. There were some rules that were introduced in the laws so as to modernize our law to ensure that we focus on what current rules are and what are the current global best practices. Then to ensure efficiency of compliance. And lastly, that data-driven policy choices. Gone are the day that some people will just sit and they look at what rate should we apply, what should we put there? Put 20, put 50. In fact, when these rules were drafted, they were drafted with data gathering, data analysis, and in putting those policies, those data into the policy choices that were made. Now, the reform gets back to 4 laws. 4 laws. But I can tell you, yes, we have 4 laws that are tax laws, but the reform, to my best knowledge, has not stopped with the 4 laws. The reform will also include some area of amendment to the Constitution. The amendment will also involve some amendment to even the national tax policy documents. For instance, if you don't amend the law, people are talking about there's no multiplicity of taxes. You only have a few taxes. Single-digit taxes. But I can tell you, if there's no reform to the Constitution, that 9 taxes or single-digit taxes will be a marriage, because a local government can still wake up today and enact a tax. A state can wake up today and enact a tax. So there has to be something to compare there, not to indiscriminately introduce new taxes. So the reform still continues to the best of my knowledge, and the continuation will be the release of amendment to the Constitution and the release of amendment to the National Tax Policy document. Now, the 4 laws, which is the focus of today, we have the Nigeria Tax Act 2025, which is divided into 204 sections, 13 schedules, 9 chapters. And this law focuses only on imposition and charging of tax. So, the way the laws have been drafted is, if you are looking for a law that imposes tax in Nigeria, don't go to any other place. Don't look too far. Just pick your Nigerian Tax Act. If it is not in the Nigerian Tax Act, it is not a tax that is imposed in Nigeria. And the good thing is, do you know the president has even demonstrated that? For some of us that are in the news, recently, some bills were passed by the National Assembly and submitted to the president for assent. And one of them contains a tax provision for taxpayers to pay tax to one agency under the Establishment Act. And the president has declined to sign that law and has returned it to the National Assembly. That is what we're talking about. We are going to have a law, we are going to have a regime, a reform, that where a tax is not imposed in or under the Nigerian Tax Act, it is not a tax payable in Nigeria. Then we have the consolidation of the CIT and PIT as well as the CGT as income tax. So now, yes, we are used to the word company's income tax. We are used to the word personal income tax. We are used to the word capital gain tax. But the truth is that under this law, what we have is a income tax. And how those law taxes are computed have been harmonized into a single computation process. Then the law introduced development levy and surcharge. And of course, as I said earlier, the development levy is to take care of all earmark taxes. So with the development levy, no new earmark taxes is expected to be enacted in Nigeria. Then the reform also harmonized the petroleum taxes, which include the hydrocarbon tax, the petroleum profit tax, and of course the computation of PPT under the old existing DOIBA, Deep Offshore Act. All of them has been consolidated and put under the Nigerian Tax Act as a chapter. And of course, we won't have a separate value-added tax act. Value-added is also under the Nigeria Tax Act. The second law is the Nigeria Tax Administration Act, which has 144 sections, 5 chapters, and 4 schedules, and consolidated all administrative provision for all taxes. So, while the NTA is imposition, the NTA is for administration. If you are looking for how to pay your tax, who to pay your tax to, the condition or the procedure, everything that has to do with administration, don't go further. Just pick the Nigerian Tax Administration Act. It provides for, as I said, registration, filing, payment, penalties, administrative rules like rulings, settlement of disputes. All of these are under the NTAA. And as I said, it also contains jurisdictions for all tax authorities so that we have less dispute within or among the tax authorities. Then the third law is the Nigeria Revenue Service Establishment Act, which has 43 sections and 3 schedules, and which changed the name of Federal Revenue Service to Nigeria Revenue Service to better reflect who we are. Because the present FRS, people think that we are agency of the federal government, but the truth is that we are agency of the federation, because we actually collect taxes not for federal government. In fact, more than 90% of the taxes we collected are not for federal government, they are actually for the federation. So the NRS better reflects the function you perform as a tax agency for the federation and not your federal government. Then that led to the repeal of the FRSEA. Now the new rule provide tax administration provision for all tax administrations, whether in the state or the federal level. And that means the tax administration provision, since NTA provide for consolidation of administration, that means the administration provision in the NRS law has to be removed, so that we have the NTA provided for all administration. Then the Joint Revenue Board Act, the Establishment Act, it has 60 sections and 3 schedules. It's established the Joint Revenue Board, which replaced the Joint Tax Board. The Joint Revenue Board now is a corporate entity which can sue and be sued in its own name. And this law unifies the federal and state tax authorities, establishes the Tax Appeal Tribunal. We all know the TAT used to be under the FRS Establishment Act, and we have this issue. States believing that doesn't apply to them. The TAT rule doesn't apply to them because it is an appendage to the FRS Establishment Act. We also have a situation where some taxpayers believe because the law is created under the FRS law, it may be under the appendage, the TAT may be under the appendage of the Federal Inland Revenue Service. So now this create neutrality for everybody by putting the TAT under the Joint Revenue Board Act. And in addition to the TAT, there's also the establishment of the tax ombudsman. What are the key changes? The summary of the key changes before I go to a few details. As I said, it consolidated consolidate all our tax types into a single document. Simplify administrative processes. So all our administrative processes are harmonized and simplified. So, for instance, before you need to know the date I'm going to file this return, what's the date I'm going to file this return, what's the date I'm going to file this return. Now, most of those return filings have been consolidated into one date. So, it simplifies administrative processes. And so many processes. For instance, ruling. How to obtain ruling is simplified and codified in the law. How to settle, if you want to settle out of court, is simplified and codified in the law. Then we have a unified filing and payment system. We have an integrated enforcement and penalties. The penalties has been integrated and unified into a chapter. Then we have structured tax incentive management. I remember there was a time we had to do a compendium between, synergy between FRS and NIPC. We have to come together to do a compendium of incentives in Nigeria. We have to go through several laws picking those incentives. But what this law has done now is to pick those incentives and consolidate them as a chapter. So if you want to know as a businessman what incentive applies to you, you don't need to go further. Just go to the NTA and go straight to the chapter that has to do with the incentive. You don't need to go out. If you need incentive for personal income tax, before you will go and search for it. You search for incentive in VAT, you search for incentive in the Stamp Duty Act, but now you don't need to go through all those stress. Just pick the NTA and go to the chapter on incentive. Even when you get to that chapter, it's also divided into parts for simplification. Then, under that structured tax incentive is also the fact that if you are under the incentive regime, which we used to call pioneer status, now the process is also streamlined under the new, now renamed priority sector. Then there's consistency now and coordination across tax authorities. You can now be sure that the way a state will administer a tax is the same way the Federal Inland Revenue will administer a tax. Why? Because now they are going to use the same law to do that administration. Now, let me quickly go through some major highlights. And before I dash to this slide, I will quickly speak about a few of them. One is taxable income. Now, the fact that all income is taxable. I had to include this when I saw what is going on in the media or social media about whether processing is subject to tax or some people are subject to tax. And those are noise. I don't know how it came about, because for me, those are noise. What we all know, and we as taxmen always know, is that all income is taxable. Even under the current sitter and Peter, all income is taxable. Well, as long as an income is not exempt, then it is taxable. So there is no coloration, whether it's so and so person, so and so person. We don't need a coloration. What we are looking at, is it an income? If it's an income, is it income exempt from tax? It is not exempt from tax. Then what's the next thing to do? You tax it. And that is how it is in all countries, not just Nigeria. If you remember, there was one popular drug baron. They looked for so many things to convict him. They couldn't convict him on anything. The only thing they used to convict him was the fact that he failed to pay his tax. So there's no country that remove anybody from payment of tax. And that is clarified in the law, that all income is taxable. Yes, there are some listing, but for lawyers, they will normally have what we call a principle of covering the field. So even if it's not specifically listed, there's a provision, omnibus provision, that say any other income. So that omnibus provision cover any other income, whatever coloration. Then tax rates, we all know that the tax rate for small business is 0% and for others is 30%. And we know that there's no more medium taxpayers. If you are not a small taxpayer, that is 0%, you are others, that is 30%. And let me quickly tell you the difference between what we have presently for small taxpayers and what we have under the new rule. Under the existing law, their small taxpayers are exempt from tax. What does it mean? It means that the income is exempt. But under the new rule, the income is not exempt. What does that mean? It means you first have to compute your taxable income, which we call total profits. It's when you have computed your total profits and you get to how to apply the tax rate. Which tax rate will you apply? 0%. And your tax payable will then be 0. And small company, not small business. Small company is defined as 50 million turnover plus asset of 250 million, except for professional service providers. I've heard some also raging issues in the social media where the law is the law. I don't know whether federal government will come back tomorrow and change the law. But what we have under the present law, we have small company and we have small business. And all of us know that there is a difference between small company and small business. Small company are when you say company, they are registered. In fact, NTA define who a company is. So, for a company to pay income tax, the threshold is 50 million. Then, small business. When we are talking of business, company is just a subset of business. We all know. Company is just a subset of business. Business is wider in scope. And the law where we have that is actually it's in the same NTA. Not NTA now, but NTAA. And the purpose of that one is not to pay tax, but to relieve them of obligation of VAT. So, number one, the two of them serve different purposes. So they don't serve the same purpose. The second issue is they are not in the same law and their definitions are different. But maybe tomorrow if governments want to harmonize them, government can do that. But presently they are different and there's no challenge actually in their implementation. Then there is now clarity between resident and non-resident individuals. And we have expansion of the definition of Nigerian companies. We have this challenge that Nigerian company is a company that is registered in Nigeria. And what do businesses do? We have many of our big companies. What they do is to just go to Bermuda and so many places and register another company. And that company is managed everything. In fact, we have one that is the director of the companies in Nigeria here that does everything that the supposedly foreign company is doing. So now we have a robust definition that's able to cure that one. Now I go back to my slide. One of the other provisions is the minimum tax has been repealed. One of the key principles in the law is that, in fact, the president specifically said that. He said he doesn't want to tax capital. He wants to tax profits. He said he doesn't want to tax seed. He wants to tax fruits. He said he doesn't want to tax poor, but he wants to tax the rich. So in the light of that, the minimum tax is taxation on capital actually. Because where the company doesn't make profit and the company is paying tax, where is it going to pay the tax from? From the capital. So now the minimum tax has to go. Then in its place, we now have the global minimum tax for only multinationals and large companies, which is 50 billion naira and above. Oh, sorry. Okay, instead of going back, it's going forward. Please, can you assist me? Okay, I think it's moving now. Yeah, it's moving now. Thank you. All right, thank you. So, as I was saying, we have the minimum tax has been repealed. In its place, we have the global minimum tax for only multinationals and very large companies. And this particular large company is 50 billion and above turnover. It is introduced, we said one of the guiding principles is we want to modernize and we want to focus on global best practice. So it is done in line with the OECD Pillar 2 Globe Rules. But I quickly need to clarify. We are not implementing the Globe Rules actually. Because for some of us that have read the Globe Rules, it is a very complex rule. But as I said, we have the best experts in Nigeria. What did the experts in Nigeria do? They just pick those expansive law and just simplify it into just simple rule. So we have that rule that is implemented pattern like the OECD Pillar 2 Globe Rules, but not the same thing as the OECD Globe Rule. It applies only on profits. So let's take note. The new minimum tax applies only on profits. And it will not apply to small or medium-sized companies. In fact, there's no medium-sized company. But it will not apply to, if you are not up to 50 billion turnover, and you are not a member of multinational group of 750 million euro turnover, it will not apply to you. Then we have capital gains tax has been taken out. So now we don't have capital gain tax in the law. However, gains is still taxable. So how is gain taxable now? Gains from the disposal of assets has been included to income tax. And so when you are computing your income tax, that is, total profit now, before you get to your total profit, you must have brought in your gains. So when you are, the law is talking about accessible profit from all sources. So your accessible profit from all sources now will include your gains. The good thing is that if you don't have gain and you have loss, your loss now can be deducted. As long as they are in the same trade or business, they can be net off against each other. There is no separate tax or rate in respect of capital gains. I read something, I'm still seeing some people saying gains is 10%. No, there's no special tax on gains. Everything now is income and is subject to tax under the income tax. And if there's a loss, it can be relieved from income. And what that means is that if you are a small business, if your business is a small business, because small business pays 0%, that means your gain will be included in your income and it is subject to tax at 0%. So that's a form of relief for a small business that used to pay gains at 10%. Then we have the development levy, as I said, that consolidates the airman taxes, the sharing rate. I think we don't need the sharing rates for our businesses. It's government that needs the sharing rates. Tax incentives. So now all tax incentives, as I said, are consolidated. It has been brought in from all the laws and consolidated under the Nigerian Tax Bill, Nigerian Tax Act, as a single chapter and divided into parts. Also, the Economic Development Tax Credit is now at the rate of 5% per annum for a period of 5 years to apply to each eligible QCE acquired within 5 years from the date of production. So from your date of production, any QC, if you're under priority sector, any QC you incur expenses on, any year of your QC, you can claim 5% credit on it. The beauty of this credit is that it can be carried forward. Even after your priority sector, you can still carry it forward for 5 years. Then when you are computing if for any entity that fall under the additional tax under section 57, which is the global minimum tax. Our law didn't call it global minimum tax anyway. Our law called it additional tax. So if for company that fall under additional tax, that 5% credit will actually be treated as a covered tax. So that the implication is that it will jump up their effective tax rate. Then we have the stamp duty, which has been simplified. No, it has gotten to a point that if you are talking of stamp duty in FRS, you have only few people you can consult because the law has become too archaic and technical. But now we have a simplified stamp duty under the NTA. And one good thing for small business or emerging taxpayers is the fact that lease agreement of less than 10 million or 10 times annual minimum wage, whichever is higher, is exempt from stamp duties. So most likely your business premises for emerging taxpayers, most likely your business premises rent, when you are stamping the agreement, you may not likely pay stamp duty on it. For employment income accruing in Nigeria to a non-resident individual, for an individual, is taxable. But for non-resident individual, we have been so generous. In fact, it's only the taxable that's as generous as Nigeria in this regard. Yes, I'm an international tax person, and I know there's no other country that's as generous as this, except the taxable. What have we done? What's our policy done? Our policy now is that if you are a non-resident and you generate employment income from Nigeria, we will not tax you. The only time we will tax you is if your home country fail to tax you. If I'm the one, I will beg my home country, please tax me. Eligible deductions now include rent relief of 500,000 or 20% of annual rent pay, whichever is lower. And for those that have their own houses and they took loan in building their own houses, the deduction of interest for owner-occupier, there's deduction of interest for owner-occupier houses. So for some of us that took National Housing Fund loan to get our houses, the interest payment now is tax deductible. Then benefits in kind in respect of lease or rented accommodation is now limited to 26% of gross income. Oh, I have 5 minutes. You forgot to tell me when I have 20 minutes left. So there is consolidation of relief allowance on gross income of it. That provision has been deleted. What we used to know as consolidated relief has been deleted. But taxpayer has not lost anything. What they have done is to take away the complexity. How much do we want taxpayer to pay? Take out the complexity. Just go straight and get them to pay what you want them to pay, instead of having a difficult, tedious computation. Commencement rule and change in accounting days simplified. Commencement rule now is you don't need to do anything on commencement rule. In fact, if not that you already know a commencement rule, I wouldn't even have mentioned it here. Because there's nothing in commencement rule, there's no commencement rule any longer. When you start your business now, start doing your business. When the only time you will think of tax is when you produce your first account. So because now we use PYB, so when you produce your first account, then the year of assessment following is your year of assessment. So for instance, if I start my business in 2025 but did not have my first account until 2026, then my year of assessment will be 27. No, it's not even 2026. Let's listen again. If I start my business 2025, I produce my account 2026 using PYB, my year of assessment will be 2027. Very simple. No, there is no month, there is no proration. Before, you need to cram your head. How do I prorate? Now, you don't need to prorate. It's the figure in your account that is form the basis. For tax official, we have not lost anything actually. For tax official, we have not lost anything. What we have done is to simplify the rules. Then relief for double taxation. This one is for you, taxpayer. Hello, taxpayer. This one is for you. Relief for double taxation. What we used to have, what I call Commonwealth tax relief, is how many taxpayers claim Commonwealth relief? Well, I don't think there's. In fact, during my time in tax policy, no taxpayer was able to claim Commonwealth relief. The reason is that he put a condition, and that condition is difficult to fulfill. So that Commonwealth tax relief is gone. But what we have is what will benefit all taxpayers. That is the unilateral relief for double taxation. What this means is that if you earn an income, don't forget, we practice worldwide taxation in Nigeria. If you earn an income that is subject to tax in another country and also subject to tax in Nigeria, the new law says that income, that tax you are paid abroad will be relieved in Nigeria, will be given to you as credit. As long as you have filed your returns, you have completed your tax, and that income is part of your tax computation. So what this means is that you don't need to have a DTA before you are able to claim a relief for double taxation. Mergers has been simplified. In fact, this is one of the things government has done for taxpayers. Before, when you are talking of merger, you need to first write to my boss here, Mr. Osadeku, when he was in tax policy. You first need to write to him to ask for ruling, confirmation, whether you can merge or now you don't need to write to any tax authority. You only need to notify, not seek approval. So when you are doing your merger now, you just do your merger and notify the tax authority that you have merged. And when you are merging, the good thing, if it's a merger, and you do that merger at good value, see what you are able to get. You can carry over all unrelieved losses. You can carry over all unclaimed capital allowance. You can carry over your withholding tax credits. But don't forget, your capital allowance will be at a remaining useful life. And for asset transfer at book value, similar rule apply. But there is a distinct treatment for acquisition done not at book value. If you do your acquisition not at book value, that is, you do it at a market value, then you should be treated as a market value person. What does that mean? You can't carry over unredeemed losses. You can't carry over unclaimed capital allowance. You can't carry over withholding tax credits. Of course, your capital allowance will be at the cost you acquire, the new cost, the value you acquire your assets. And there's no more 6 years relationship for approval by FRS. What you only need is notification. The good thing is that the slide will be available, so I will skip so that I am not disobedient. You can look at this on your own so that I am not disobedient. But I will just mention it in first person that the capital allowance computation has now been simplified. In fact, now if you are able to do straight line method of accounting, you can do your capital allowance. So what it means is that how many years will this asset last? Based on the law, if it's 5 years, divide your asset value by 5 years, and that's your capital allowance for each year. Very simple. No, what we used to call gap is not there. What we used to call overlap is not here. And now we have only 3 rates, capital allowance rates. We have just 10%, we have 20%, and we have 25%. For VAT, the rate remained unchanged. We all know 7.5. Then the law allows for e-invoicing and fiscalization. And that's why we are hearing FRS talking about e-invoicing. Now, the process of charging, collecting, and filing VAT will be automated through e-invoicing technique. And the law also provides for fiscalization. So, for those at the later stage, FRS may be talking about giving fiscalized instruments for places where they don't have network to practice e-invoicing. The good thing for taxpayer also. Now, VAT refund must be made, the law says shall be made within 30 days. So that means if you need a VAT refund now, As long as it's a VAT refund, and as long as that VAT was paid and remitted to FRS, you will get your refund within 30 days. That is the new provision of the law. However, watch out. There is penalty for inaccurate, fraudulent claim. There's serious penalty in the law, including blacklisting, and also you can be convicted. What are the opportunities? I will just run through it. 1 minute and I'm through. What are the opportunities for taxpayer? We have said this for small business, for small company, for small business, you don't need to file returns. Then we now have simplified and unified compliance procedures. We have harmonized calendar for filing and paying taxes. We have a standardized enforcement framework and system across all types. You don't need to learn how will compliance of VAT, will it be different from CIT? Now it is standardized. We have clear interpretation of the law for you taxpayers, predictability in tax incentive and enforcement. And the good thing for taxpayers, we have the new tax ombud office, especially for emerging taxpayers. How many of emerging taxpayers can go to TAT? Now, even if you can't go to TAT, for some small issues, you can go to tax ombud. For instance, the tax authority gave me assessment, asked me to do this when I'm not supposed to do this. All those complaints, the tax officer says so and so, which shouldn't be said. Those things you can take to tax ombud, and they will resolve your issue for you with the tax authority. Lastly, what should emerging taxpayer expect? I think that should be the last line. Effective and efficient tax administration, expansion of tax nets, improved compliance and enforcement. There's going to be, so take notes. As much as you have so many things good, but don't forget, there's going to be enhanced and improved compliance. As where the tax law has given so many things to taxpayer, he has now also empowered the tax authority to ensure that taxpayer comply. Then you are going to have a reduced administrative cost, because some of you imagine taxpayer, you may not even need to take a tax consultant, because it is so easy, simple now to compute your tax and pay your taxes. Then there's enhanced digital interaction. Tax authorities now are going to deploy technology. Tax authority will deploy technology. Sorry CITN ICANN. They cannot file their returns without you. They can file their returns without you. A standardized enforcement framework and penalty system across all tax types. So for you, recommendation, taxpayer, imagine taxpayer, register and regularize. Use available incentive, use it wisely, and invest in basic technology. And with this, listener, I say thank you.
Yeah. Mr. Kayinde gave us a deep dive into the tax reform law. He highlighted the key implications and opportunities for emerging taxpayers. We thank him for working closely with the committee. And we thank the committee also for entrenching the 10 principles that guided them in producing such a holistic tax reform for us. Please, a round of applause for him again. Thank you. Going forward, we have a little presentation by our Director of the Field Operation Monitoring Department, Mr. Matthew Osanenko. He will be speaking on the topic Understanding Tax Obligation, what every small and emerging business should know. It is very important at this point that we listen to this important presentation, because we are the emerging taxpayers, compliance, tax reform, and this is a rich discourse that will continue over time as we migrate the emerging tax to the higher level. Thank you very much.
Thank you, Compare, ladies and gentlemen. Thank you very much. Compare. My name is Matthew Osanego, FRS. I'm glad to be here and I'm glad to be making a presentation. Please let the slide be there. Yeah, that's fine. I want to thank the organizers of this event, giving me the opportunity to stand before this audience to present this paper. Mr. Kai Indikadishomo had made my paper very easy. He is one of the drafters of this law, so let's appreciate him. Let's appreciate him. Like we've heard from the keynote speaker by the president of the Institute of Chartered Institute of Taxes of Nigeria, that voluntary compliance is very imperative for inclusive growth. So my job this morning is to let out some very key information to the audience today. And my job is very simple, to let you know that the tax laws that have been signed into law by Mr. President will take effect from 1st January 2026, and it's need for everyone to be aware of our obligations, also be aware of what we need to do. So I'll be taking you through introduction, the fiscal policy and tax reform trust in Nigeria, the role of small and emerging businesses in the economy, obligation of small and emerging taxpayers obligations, and there is also need for you to know some sanctions where you failed to comply. Ladies and gentlemen, you agree with me that Nigeria has taken a giant stride. Nigeria has taken a bold step. And among the Committee of Nations, Nigeria has been applauded with the economic transformation and fiscal reform that have been carried out by Mr. President. It's not just a plan, but it's a visionary roadmap and very transformative. And all this is to unlock inclusive growth and revamp microeconomic and fiscal policy landscape. And this is geared towards economic recovery, sustainability, and shared prosperity. Before now, when we look at our tax laws and our fiscal policy instrument, when we look at the tax outlook issued by ETAF, you see Nigeria, coming behind a country like Lesotho. Nigeria coming behind a country like Rwanda. Coming behind countries like Uganda. And we counted among, but currently, because of this giant stride, Nigeria is stepping forward to be counted among the top 10 in the world and the top in Africa. And the key thrust of this administration is the fiscal policy and tax reform, like I've been enlightened by Mr. Kennedy and the keynote speaker. And